Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Hello everyone, before we get into the stock here, just wanted to point out a product that I just set up and am very pleased with. It's a $100 monitor, and I bought a $100 USB monitor 3 years ago. This monitor absolutely blows it out on the water. It is big, beautiful, and it's going to allow me to see more charts more clearly. So I'm looking forward to putting this in part of my regimen of trading, and I would highly suggest it for $100. This can absolutely increase your profitability if you're able to see charts more clearly, more information. And just a quick suggestion here, let's get into the charts. Hey everyone, looking at Amazon on the daily, weekly, and 5-minute time frames. So a very clear bearish break occurred here today, and what we could be watching is, I was pointing out to members, the channel between the middle Bollinger Band support and the 10-day moving average resistance, and the break would dictate the short-term direction. So the bulls did buy the dip on Wednesday and Thursday. You can see Thursday's candlestick was within the range of Wednesday's candlestick, and when that happens, you can use the range of the previous day as we tighten to see a clear break and indicate that short-term direction. So the range was 760.60 at the low, 765.17 at the high. We opened near the low of the day, and as soon as we broke 760.60, that instantly increases the odds significantly that the bears will prevail on the day. And we lost the 50-day or the middle Bollinger Band support, 759.96. We can see we barely lost it here, but quickly regained it back on the consolidation at the end of July, and we held it down here on the dump at the end of June. So this was I take that back, that's the 50-day. So we held it here in July, and losing it here is definitely a bearish development, as it has been to support for the past 2 months. So the spike in volume, also a big indication standing out for the bears, and we're looking down at support at 750.35, and after that level we are looking to the 50-day moving average of 740. That's what we bounced off of at the end of the June dump. So 750 should be pretty tough support, at least the first go around, unless we see a big increase in bearish volume. And I say that because it acted as resistance here at the end of June on a bounce attempt. We rejected from it. We turned it into support, and then look at this back test and perfect hold of that level as we headed higher. So 750 psychological in the past 5 weeks has already acted as resistance, then as support, and we'll see if it acts as support here again. The weekly time frame, bearish reversal, a little bit of a bearish reversal candlestick last week with a hanging man, not really the long enough wick to see the lower wick there, but it is clearly a bearish candlestick this week, that red Marabozu, which means the bears controlled the entirety of the week, and it's the first lower low since this bounce of higher lows. So we have not confirmed a bearish reversal candlestick in over 2 months. We can see one back here was negated, so a red week this coming week will be close to a bearish MACD cross on the weekly, and we'll look to test this 10-week moving average support as well. That will be right around the 50-day moving average as we head into next week. So if 750 were to break, should be some strong support with the 50-day and the 10-week lining up right around the same level. So let's look at the trading on Friday, the 5-minute chart. We had a clear bearish start, rejected from the 20-period resistance on the 5-minute, dumped down, bounce attempt, decent little bounce there, an oversold 5-minute bounce, and then we consolidated, tightened the range, lower high, maintaining support, lower high. Right here's your bearish break, and it's accompanied with a spike in volume compared to the last hour's worth. And that break right there was very clear because we had support of 758.42, 758.40, 758.50, and then this candlestick right here, we dropped to 758.30 and then down to set a apparent low of the day, but the bulls did hold it there. So 756.89, we held it, 757, and a rally off of that point. So we know that's a very key support level, that little bit of a double bottom, and we came right down to that level again, so it's now a triple bottom, 756.89, 757, and 756.94. So we had further bearish action to end the day and after hours trading, but we know that if we break that level, the low of Friday, we will be headed for another leg to the downside towards that 750 psychological support area. So we'll see if the bears maintain control. Those FANG stocks showed some weakness, more so than the overall market, and the bears following through with Amazon on Friday and looking for more downside early next week. Thanks for watching. Have a great weekend.